The graph protocol. What is it? Then I'll share the chart, and then we'll take a look at my potential profit-taking targets, my price targets for 2025 for this crypto cycle. I'll take you back to Grok. I'm going to take a quick look at Grok on X. What is Graph Protocol? It is in the AI space. Okay, let's do a quick little read, and then I won't bore you with all the details. We're just going to basically look mainly at the price and how bullish I am on it at the moment. But the Graph Protocol is a decentralized indexing... Oh, sorry. Sorry about that. I just dozed off for a second. The Graph Protocol is a decentralized indexing protocol designed for organizing and accessing blockchain data efficiently. Okay, so from a fundamental perspective, I understand the AI space a little bit. All the dev stuff and the blockchain stuff and all that. Yes, I've been in crypto since 2013, but mainly I'm a technical analysis guy. There's certain things I'll look at the fundamentals like reserve, etc. I am in the Graph Protocol because I am confident with the AI space, and the technicals of the graph look very good as well. But let's read a little bit more. But I'm just telling you, this stuff goes more over my head than someone else who really understands the AI space. Okay, so I don't want to go, I'm so cool, I don't understand all this stuff. No, I'm just going to be honest, I don't understand all this stuff. Okay, I start to doze off a little bit. Purpose: the graph aims to make blockchain data more accessible. That makes sense, by allowing developers to query data from blockchains like Ethereum, IPFS, and other users using GraphQL, a query language for APIs. So I understand what APIs are in the precious metals industry. For online websites and for being able to price things, you use APIs to call out to data out there on the internet, and it gives you accurate, or it should give you accurate information on the pricing of the spot price of gold and silver and all that. So I understand what APIs are, what they do, and the graph is in that space. But for the crypto world, right? So it's allowing developers to query data from different blockchains. So it's kind of like it's aggregating it all together. Get it? Got it? Good. This protocol serves as a data layer for various networks, facilitating the creation and use of decentralized applications, dApps, by providing indexed data, right, in a structured format. Okay, so it's gathering it all together, right? Cool. And I won't go into all that stuff about subgraphs and and curators and delegators. Straight over. Now, GRT, the graph token, this is the native token used within the ecosystem for various functions like staking, signaling, and paying for queries. So you have to pay for your API calls. You pay just a little bit, right? So they use the graph to do that, the GRT token. The protocol has an inflationary model with new tokens, as most tokens are, new tokens issued as indexing rewards, balanced by mechanisms like token burning through query fees. Cool. Use cases: it's widely used by projects like, now this is one of the fundamentals, it's widely used by projects like Uniswap, largest DeFi swap facility, Aave, huge, Synthetics, and others, to enable real-time data retrieval for their applications, okay? Making decentralized application development more straightforward and efficient. That's the basic view of the graph protocols. Some of it goes over my head, the deeper down stuff, but I understand the basics of what it does, and it's part of the AI general thing. Cool, cool. Let's take a look at the price. Now, how did I hear about the graph protocol first off? Let's take a look at its price. Juicy AF. How did I hear about it? I'm going to give a big shout out to, and I've never met them, I've spoken to them a little bit, just back and forth in Facebook comments and whatnot, and YouTube comments. Good old ASX Trader. You should be following ASX Trader. ASX Trader has 26,000 subscribers, nearly. Incredibly good, way better than me on technical analysis stuff. If you're not following ASX Trader, I almost don't want to tell you to follow ASX Trader, because then you'll just leave me. I don't think you will, because I do this daily live show and you love me anyway. But man, you really need to be subscribed to ASX Trader. ASX Trader mentioned the graph in one of these more recent-ish crypto market analyses and was very positive on it. It sparked my interest. I took a look at it, and it was around about 22, was around about 22 cents, 23 cents, 24 cents. He'd been talking about how it had changed market structures, and he was very positive on it. I think it was around about here when he started talking about the fact that it had changed market structures, or maybe even before then, actually. I think it was probably around here. And he was into it, and I decided to get in a little bit later, and I've seen some nice moves, and I went in with size. Okay, so it's my biggest bag, and the higher it's going, the better I'm doing, obviously. And with the graph, we are at a very key junction. So I'm not going to say we're out of the woods just yet, but we're at a very key junction from a technical analysis perspective. It does seem like it's going to continue up like everything else is at the moment. Most things are going to, because we're in a crypto bull run at the moment. We're at the start of the alt season. Anything can happen. Crypto can crash from here, of course. But look at this. The downtrend line, the high of $2.80 in February of 2021. Then we had a low of 5 cents in December of 2022. Since then, we posted this sort of major interim high at 50 cents. That formed this downtrend line. Then we just changed market structure, as ASX trader would say. And he probably called it around about here when it broke this level right there at around about your 20 cent level. He probably called the market structure change there and probably called it as a good one to get into. I saw it a little bit later than that. And as I said, man, like the 23, 25 cents is when I've gotten in. It's looking good. And we're just at the back. We're just back, I should say, at this trend line. I'm more confident to think that it will clear. We've had a spike above. Okay, so that's a positive sign. It's a bit of a testing of the waters. Let's go down onto the 4-hour time frame. There's a couple of things that we need to watch out for, though. I wouldn't be surprised if we do have a dip from here, and I'll show you the daily time frame in a second. Out of interest, we've been just ranging on the 4-hour time frame, really just ranging between roughly the halfway point and the top end here on the relative strength index. It hasn't spent any time down here since the start of November. Okay, so it's been about a month where it's been just above the halfway mark on the 4-hour time frame. So it's just this slow creep. It was really acting like a magnet, this downtrend line acting like a magnet to take it towards. It has busted out, and so far it's remaining as support. I just don't know if that will last. If that does last, you would want to see this remain as support and then bounce off and then quickly start heading back up. That would suggest that the graph will be continuing its epic run to the next levels. We'll take a look at those in a second. We just need this to hold. So let's show you the daily time frame, though. Here's the contrarian view. Well, here's the opposite end here. We're extremely overvalued for the graph GRT on the daily time frame. Okay, that's why I'm saying, hey, when you get into extremely overvalued, you can spend a bunch of time there, but we're already there. Okay, that's why I would say if you see a dip in the graph, don't be surprised. It's definitely not surprising after such a long run from 13 cents to 32 cents. So let's take a look. There's the breakout. Well, there's the bottom there. If you want, you could say, we'll just call it from there. You can take it from any point, but that is a 150% move. Or, for example, when it looked like it was changing market structure right about here at your 20 cent level, that's a 70% move. Okay, and right, a move back down from here because we've been extremely overvalued on the daily time frame. Yeah, that's kind of par for course. I would want to see support hold at no lower than. If we do no lower than there, easy, no lower at the breakout point. I don't think we get as low as there, but we'll pop there. That would be your definitely don't break here. So we'll just go, come on, fella. Line in sand. Line in sand. You don't want to break here. That would spell not good. That would spell change of market structure back into potential bear. For that, I don't think we're going to get there. But watch that level for support at the 20 cent level. I'm not saying it's going down to there. I'm very hopeful that we remain support here and then we just kick onwards and upwards. But bear in mind, nothing goes up forever, so you could have a retrace. The main area I would expect to find support at would be here. Very clearly, you can see it. That's around about the 23 cent US cent mark right there. And that coincides with this level of support and then this previous level of resistance. So there. So a bounce from there, a quick fake out, and then haha, sucked in. We're onwards and upwards. That would be great. Preferably I want to see this happen though. I want to see this and then a quick test of support and then onwards and upwards. Cool, that is the graph on the shorter term timeframes. Let's talk about higher targets if they are coming. On the weekly, or will I do the monthly? So that's the weekly, sorry, let me show you the weekly relative strength index and I'll get rid of that for now. Relative strength index on the weekly time frame, moving clearly in the upward direction, and you've got room to move into extremely overvalued, okay? So you've got room to move higher. On the monthly time frame, look at this. This is the thing that gives me pause to say the graph, and ASX Trader believes so too, but it gives me pause to think we've got a decent amount of time to go. Okay, again, a rising tide raises all ships. Crypto in general will be going up. I still am pretty confident of that. I'm still confident of that. So this has got a lot of room to move till even we get into the top end of the relative strength index on the monthly time frame. I don't know what happens from there, and neither do you. But this structure here, I don't think I've ever seen something do that. I don't think I've ever seen it do that. So that's why I'm more confident this is going to make a move. Now, you might find resistance right here, and then that's it for the crypto cycle, okay, for the graph. It might be, or it might do the following, where you go up into extremely overvalued for the very first time, and then that would be the signal. So you've got a lot of room to move, as I said. So let's talk about top targets. This is the Fibonacci. I'm taking it from the old high, $2.80, and definitely the low of what it is, of about 5 cents. And we have Fibonacci targets. Is there any, I've got to first look for levels of confluence, okay? There's no point using Fibonacci if it's not matching and lining up with anything. Is it lining up on the graph? There's one major point, I would say, and that would be right here at your 0.382, and that's at your $1.12 mark. So analysts probably don't need to use Fibonacci on this. You could just use basically lines of support and resistance. So, but I will anyway. I've got to pop in my getting interested line. So technically, usually what I would do is I would use a Fibonacci and I would put my getting interested line probably at the 0.236 right here, and that's at 70 cents. However, I'm in the graph already, and really I think the getting interested line is breaking this downtrend line. Now, I took a risk and got in before the getting interested line, okay, naughty me, but I was listening to ASX Trader. I'm very confident on his stuff, so again, give him a huge follow. So I would say though, for anyone coming in new to the graph, I need to see it hold. You know what, just to be safe, give me a minute. Getting interested line is, yeah, no, I'll keep it at where it is right now. So I'm going to do it at the breakout. So it's actually where it is around about now. And I'll do that at around about your 3.3 cent mark. Cool. If you were wanting to get into the graph, 3.3 cents getting interested. Okay, that would be the point. You may decide to get in now, but if I was getting in for the first time, I just want to see where this goes in the next few days, the next week or so, because we're at a top end here. This is major resistance. It's acting as potential resistance right now, so you might want to wait for a dip. I would wait for an absolute closure above. So if you start doing this, like there, and you start bouncing off, that would be over the getting interested line. Okay, so that's my getting interested line. Get rid of that and pop that there. So let's talk about my getting excited line and my final hurdle for new all-time highs. Okay, getting excited line. I would be getting excited. Yeah, okay, 0.23 or this one. It's either going to be here at $1. Geez, it's pretty high though. So no, I'm going to say this is my getting excited line, okay, right here at the 70 cent mark. You start cracking above 70 cents and then it's looking good for an extra pump, okay? 70 US cents, getting excited. Cool, good. And then I'll also put in my take profit targets as well, and my final hurdle for new all-time highs coming, okay? As you know, this is really live. I do this literally. I don't look at too much. I don't look at it too much beforehand. So I'll try and keep this short and sharp because I've got to try and keep this live and interesting. Am I going to change my getting interested line to my getting excited line to here? No, look, I'll keep it here at the 70-cent mark. Really watch out for a take profit area, and this is where one of your major take profits would be at $1.12. If you want to call it the psychological value of $1, just do that. But we've hit $1 previously, so it's done it before. So it's not like it's in price discovery. So I'm going to say at about $1.12. Yeah, $1.12 would be a first take profit target. TP1. Take profit target if you're getting in at around about these kind of areas. Okay. TP1 at $1.12. That's not my final hurdle for new all-time highs though. I usually have to stick with the 61.8 or the 78.6 based on Fibonacci for final hurdle for new all-time highs to come. Because it's such a large price range between $2.80 and like 5 cents, I'm going to pop it at the, I might be breaking my rule here, but I'm going to pop it at the 0.618. Cool. That is at $1.80. $1.80 final hurdle for new all-time highs. You have to break and hold over $1.80 on a monthly time frame, not spiking to it, but closing above it on a monthly time frame in order for me to say that new all-time highs in the graph protocol are coming, okay? That it will break the all-time high. Could it double top? Yes, but that's, for me, that's the final hurdle at $1.80, and I would also put that as a take profit 2, TP2, because you never know, things could really turn over back around at the we're getting a bit busy here at the TP2 level at the final hurdle for new all-time highs. So those are my major levels. Then we'll talk about higher prices if we break all-time high. Where's the major take profit target? So let me get rid of that for now so that you can see this a little bit more clearly. Right here. Here's the graph. Right. Getting interested. You may decide, now well, let's do some little price stuff here. You may decide, hey, I want to get in around about here. You preferably want to wait until this is really confirmed and held as support. But let's say you get in around about the 3 to 3.5 cent level. And let's just decide, okay, you're getting around about here-ish. Let's call it 3.5 cents. A move to the getting excited line of 70 cents is a 100% move. Basically, you've almost doubled your money. Okay, in not 3.5 cents, sorry, 35 cents. I'm seeing this in cents modes. It's 30 cents, 20 cents, 30 cents. So from 33 cents, 35 cents to 70 cents, that's a doubling. What do you do on double? You sell half of it, you recoup your initial investment, and then you're free riding the rest. Do I always do that? No. Should I take my own advice? Yes. That's why I keep repeating it, because I really need to take my own advice. Sell half on double, great, and then see what happens from there. Cool. You would need to be watching the relative strength index. Where are we? When it's at 70 cents, where are we on the relative strength index on the weekly and the monthly time frame? Are we already extremely overvalued for some reason? Is it looking like the top is in potentially? So you've always got to take that into account. So maybe you sell half on double at 70 cents. You do you. You might want to wait until the take profit target 1 instead. That is a 220, 200-ish kind of percent move from here. Then you would take some profits. Maybe it's half, maybe it's less than half. It's up to you. And then your next take profit target is here at $1.80, your final hurdle that you would need to close over for me in order to say new all-time highs coming. Okay, this is a major. This is along the way, it's a pretty significant take profit target at $1.80. That's from here. If you got in here and you didn't sell out, and you only rode it all the way, well, that's a 400% move. Okay, again, you should be taking profits along the way, so this wouldn't be a 400% gain from your initial entry, but from here to here, 400%. From here, let's talk about higher targets. I want to go with the 2.618 to 4.236 levels. I find them to be decent targets after all-time highs when we get into price discovery. So I'm going to say major profit taking. This is getting up there. Let me draw it in and then we'll see if it makes any sense. I usually like 2.618 to 4.236. It doesn't mean it absolutely works, but that's just the area I just like to use. And that's it between, oh man, we're getting high. That's pretty high. That's $7.50 to $12. Is that too much? Let's see. That's a 2,000% move to a 33,200% move. The reason I say that, look, after all-time highs, I will keep it at that. That's a major profit-taking area if we break the all-time high. So in the graph, let me be very clear. I don't know if this will definitely break its all-time high. I'm not 100% confident on that. Let me state that once more for the graph protocol people. I'm not 100% confident that if we go in that at the peak of the bull run cycle in precious metal and precious metals in crypto, I'm not confident with the graph at the end of this cycle, whenever that is, that we will have broken the all-time high. We certainly may, but I'm not 100% confident on it, just because it's been such a large price range between $2.80 and 5 cents, and we're at 30 cents currently. Okay, a move up to $2.80, that's a pretty darn big move. What is that in terms of its percentage? From here to there. Okay, yeah, it's less than 10 times. Yeah, you could 10 bag it. It's possible. I'm not going to say it's 100%. I'm really confident that we could definitely get to the take profit 2 area of $1.80. That's where I'll be considering taking a decent amount of profits there, and I will be writing the rest. But I will pop in the major profit taking right here, and that's it between $7.50 to $12. Major profit taking. This is a bit of blue sky thinking, and many of the people who are going to be posting on this under X who are watching this are going, hey, $7.50 to $12, really easily doable for the graph. And you may be right. I'm just not so confident about it. But here's the thing. Generally, I don't find that after you break an all-time high, I don't find the 1.618 for crypto to be the place where you top out. It can be for other assets, but I don't find it to be. Let me go to the brush tool. So, for example, ignore this, right? Ignore the timeline, ignore the whatever, right? All-time high from sure. It doesn't usually be that at the end of a crypto cycle, if it breaks its all-time high, it stops there at the 1.618 from the old high and the old low. It tends to go higher. It tends to go up to the 2.618 or higher, okay? I just don't think that's high enough above the previous all-time high. That's why I use the 2.618. So that's why I'm sticking with $7.50 to $12 for the major profit-taking area. Might not get there. You would want to be, I imagine, pretty much out of your entire bag of the graph at this point, unless you're using it for staking and you're earning a passive income, quote unquote. But you would want to keep a little bit in the bag. You always do. So if that gets to $7.50, $12, and I've gotten in rounded down about here and I've sold a little bit along the way, I'm going to probably leave about maximum 20% left, probably 10% if it gets to that $7.50 area, because that's a pretty darn good profit. Okay, but you want to keep some in the bag. You never know, it could shoot for the moon. Okay, that's my profit taking areas. Let's go through them one more time. Getting interested at 3.3 cents. Getting excited at 70 cents. I should maybe put that as a take profit area, but you'd maybe consider a little bit here. You may want to wait for the getting excited line before you get in. Take profit 1 is at $1.12. Take profit 2 is at $1.80. And then major profit taking at $7.50 to $12 US. Not saying it's 100% going there. Okay, that is the graph. I am bullish on it from a technical perspective, from an AI perspective and general fundamental perspective in the AI sector. I am bullish on that as well. And again, rising tide raises all ships, and it just looks great from a technical perspective. That's the graph. Final comments, and then we'll get out of here, people.